but it is that energy piece that's the one to ponder to the minute. Pete McGuire from XM Group, live in our Sydney CBD studio. Peter, welcome to you. The Goldman Sachs connection clear on price action here, but also a sense that really there's a lot to play for now on greenback moves. So the US dollar and the Fed minutes, how they might swing the appetite right the other way around in a very short space of time. What's your expectation on those minutes?
Well, exactly. Good afternoon, Carson. Look, that's the great unknown, and that's why if you're looking at the momentum and you're seeing the size of short positions, absolutely, they're increasing daily. I think a lot of traders at the present time are worried about if you are going to see a wipeout or a washout as far as those crude prices, which could easily take $2 or $3 or $4 off the market. So in consideration as far as minutes, there's talk that you could see something happen in June. There's speculation there. You've got certain board members calling as far as inflation approaching that 2% number. And of course, Labor getting tighter month on month. So that's going to be a concern. So that's where, you've got, I think it's a 50-50 split as far as, consensus at the moment.
And so back on Goldman's, its rationale, its sudden sort of acceleration of that call now for the imbalance to have ended, even really before we expected it. So how do you read that?
Well, a couple of points that you've got to take into consideration. First, you've got the Niger Delta and what happened there as far as Nigeria. Production numbers, Carson, are down at 20-year lows. So that takes into consideration what's happening there. Also outages as far as Venezuela. Move your mind across as far as Fort McMurray and what happened with Canadian tar sands in Alberta in April, those massive wildfires. Then that always contributed as far as output. So that's really contained output at the moment. We're saying it's about an even-Steven game, and that's where you've had those numbers push higher as far as what Goldman's is forecasting.
And yet the geopolitics has always been lurking in some shape or form somewhere. It might have been Iran one week. It might have been Nigeria, or it could have even been,
Venezuela, or of course
correct.
What happens in South America. But you know what? I look at the Arab, and nothing solved itself over there. I put my mind across to it. It reminds me very similar. We've talked on this for many years. Very similar in its construction to what happened with as far as Yugoslavia and its war issues in the mid-90s. What's happening as far as where Lebanon is, and you've got a 15 or 16-year civil war that encroached from 74 to the best part of 1990. So I see what's happening with Syria. I think there's many years to run there.
It's just interesting that one house can move a market to a 6-month high on what it purports to be the fundamentals on outlook, whereas others can read that in a whole different way. I mean, go into China, for instance. What makes the call today any clearer on crude than it does, say, pontificating on other Chinese metrics, which at that point we would all agree are far murkier?
Well, absolutely right. I mean, this is the trouble that traders face. I've been up since 2:45 this morning. I really tried to get a handle on what's happening. Have a look at what our market's done today. Those miners well and truly up. You look at the Shanghai futures, and what happened last week was one of its largest falls in history. I think they fell 12 or 13% for the week for rebar. So take all that on board. What's happening from a trader's perspective? And what's very volatile times, Carson.
What's the implication for the Australian dollar? Because if you look at the correlation between iron ore import prices in China and the value of the A dollar, they tend to move in lockstep. Now, what is being called out essentially is not just stabilization in the iron ore price, but now an end to the correction, and like crude, a push higher. Where do you see that settling? Because what would the implications be for the A dollar?
Well, I think from where we're sitting, there's every chance you could see further push down here, 72, 71. We've got traders all over that because of its large volatility swings. When you're looking at what the retail investor is certainly very focused on the Aussie. It's been a great trader over the last, say, 6 to 12 months through those large swings, and I think that the present time you're going to see further downward pressure. Election, there's uncertainty. I think Australia is having it's probably got its best years behind it. It might take a little bit of a breather, and I think it's going to be a very interesting 6 to 12 months.
Good day, Pete. It's Ben from Options Express here. I
Ben.
just wanted to go further into this Goldman's report. I mean, to my mind, all I've heard is one half of the fundamental equation. The other half is, of course, demand. Supply is one half of it. And so what are we earmarking for a pickup in demand, sort of in the short or medium term?
Put your mind across this, Ben. We look at about 160, 170 million motorcycles in India. The top 4 consumers are USA in this order: USA, China, Japan and India. India will overtake Japan in the next 12 to 18 months. So massive consumption coming out of that Indian basin. You've got motorised vehicles, motor cars, you name it, just, crisscrossing the nation. And that consumption pattern is growing very, very strongly. So that's where we see a lot of numbers as far as growth. And I think that will continue.
That's nice to hear that word, India, because I've been talking about India for as long as I care to remember about this, a general pickup in the commodity cycle based on Indian stimulus and an urbanisation similar to what China went through. But, we've spoken about it for so many years, but absolutely nothing to trouble the scorers at this stage in terms of, hard factual evidence that they're actually going to embark on such a program.
Well, they will. I mean, that's a point in time. But if you look at the diesel consumption out of their metrics, it's about 40%. Gasoline's only about 12%. You've got, of course, when you're looking at fuels to burn as far as cooking or heating of water, I remember going back and listening to some wonderful topics as far as, the cow dung to boil water, and fuel and so on. So India's coming up the curve very, very quickly from infrastructure and, of course, technology and all of those patterns that roll into, a burgeoning economy, very similar to Saudi Arabia in the sense a very young economy, age demographic, and they're very, centred on mobility.
So that's going to benefit the likes of iron ore and copper as well down the track, is it not?
Yeah, you betcha. I'm absolutely sure of that as far as consumption patterns. And you'll probably see, there's plenty of building to go on in India. I'll be over there in a couple of weeks, and it amazes me every time I see it because it's just growing so massively, and population is just, 1.3 billion.
And yet the big handbrake, though, that time and again is trotted out, though, to that story, and the compare and contrast on China is the relative lack of literacy amongst the Indian population. So you have these millions whose education outlook is pretty much blighted and bleak.
Absolutely.
And nothing has really changed there compared with China. So you look at the Great Leap Forward, it won't happen unless they're educated.
Well, very true, very true.
So watch this space. A brief final thought on anything of your choosing, exit any of that discussion.
Well, a couple of points that need to consider, Carson, as far as a trader's perspective. John Paulson, the big gold, he's the #1 man probably globally as far as gold hedging and gold speculating. He's pulling out of as far as his gold trades, and you've got the old George Soros and his bunch moving back in. So they're right into the gold trade at the moment. They see further volatility, and that's where it's interesting to see different players doing different things.
And is Tim Fisher the next oracle of Down Under or of Europe? Because he's been pontificating on a Brexit, saying it would be bad for the Australian economy. We've been debating this the last few minutes. Have you got a view on that? The former Deputy Prime Minister wades into market analysis.
Well, it's a hard one to say. The way London is at the moment, there's a big push to get out. There's also a big push to stay in. If they do get out, I think that's going to have certain implications, of course, to their domestic economy, and it could be far-reaching across, of course, Europe and what happens over here. So it's a wait-and-see approach, and I think that I'm not prepared to put my hand up because I think it's very, very even at the present time.
It'll make Soros's play into gold look pretty good if there is a Brexit, I would imagine.
Think of what he did in '91. Think of how he shorted the pound, and think of the money he made. I think it was about £900 million. So that's maybe he's got a mind that he's coming back for a rerun.
Do you think sterling would really fall out of bed at that point? You don't think it's been priced accurately to date?
Well, there's probably going to be far more movement, and when those gyrations do hit the market, if they do exit, then of course you're going to see big swings, and that's where these guys might be mounting positions at the moment. Well,
watch this space. We go to London live after this break without any further ado.
I'll be watching.
You've given us the summons to do just that, and we will oblige. Thanking you, Pete McGuire there, joining the show from XM Group.